Good afternoon. My name is Ben Larkin, the Chairman of the company, and it's my pleasure to welcome you to the annual general meeting of the company. It's now noon, the appointed time for the AGM. Firstly, I'd like to introduce my fellow directors, Lynn Golby, Lord O'Shaughnessy and Patrick Reeve. Also present is Will Fraser-Allen, the Managing Partner of Albion Capital, the company's investment manager, who will shortly give a presentation on the results of the company for the year ended the 31st of December 2021. The quorum for this AGM is 2 members entitled to vote in person or by proxy. This has been met and I therefore declare the meeting open. The notice convening the meeting has been in your hands for the statutory period, so I will take the notice as read unless anyone objects. The record date and the deadline for receipt of proxies was noon on 6th of May 2022. Due to the success of last year's webcast meeting, and in order to maximise the engagement of all members, the board have arranged for Lumi to broadcast this year's AGM. This enables members to participate fully in the meeting using the platform software. You will all be able to ask questions and vote on the proposed resolutions. Following the manager's presentation, the directors and the manager are happy to answer questions from members about the presentation or the proposed resolutions as time permits. I'd like to thank members who have already sent their questions and queries through to the chairman's email address, and I will also be addressing a selection of those shortly. The board really welcomes feedback from members, and I encourage you to continue to do so. To ask questions during this meeting, please select the messaging icon from within the navigation bar and type your question at the top of the screen. To submit your question, click on the arrow icon to the right of the text box. If you want to ask questions, you can do so from now on. Members are requested to restrict themselves to 2 questions initially, which may be moderated to avoid repetition. Depending on the level of questions, there may not be sufficient time, to address them all. The comments and questions raised during the meeting will be considered, and the corresponding relevant questions and answers will be posted on the Albion website as soon as possible after the meeting. After questions have been answered, I will ask you to vote on the proposed resolutions for the AGM. And I will now hand over to Will Fraser-Allen for his presentation. Will, can I pass to you, please?
And thank you very much. So a warm welcome to everybody watching today's presentation. And what I plan to do now is to take you through my presentation, where I'll look at what we've been up to over the last year, presenting the results for this company. So if we move to the next slide. Gives you a broad agenda, running through the highlights. Also giving you a bit of an idea of the type of investing we've been doing, where we've made some exits, just talking about important issues such as ESG and how we are planning to run shareholder events going forward. So if we move to the next slide, I'll be able to take you through the financial highlights for the year. So in summary, it was a strong year for the company. We ended with an NAV just under 95p, and that was having had a total shareholder return in the year of 17.2, which was a strong 20.5% return. So all in all, we're pleased with that result, which reflects lots of good performance in the portfolio, which I'll come on to. As you know, as many of you will know, our policy is to pay a dividend that over the year of approximately 5% of NAV, and that's calculated each half year as 2.5% of the prevailing NAV. That's led to a 4.37p dividend, which was indeed around 5% at 5.3%. So moving to the next slide, I thought it'd be useful to set a bit of context. We do live in somewhat interesting times. It's worth just highlighting that background to give some context to what I'll be saying as we go through. Clearly, COVID-19 did continue to impact last year, although mercifully we seem to be over the worst of it now, as the world is opening up very rapidly, which is clearly good news. But as one issue recedes, another has very much come to the fore. So the very sad and frankly appalling events in Ukraine have reared their head, and all of us are thinking of the very difficult time the Ukrainian people are going through, and clearly we need to be mindful of the broader impact that is having on the world around us, which is most obviously impacting through very high inflation indeed, and the inevitable prospect of increased interest rates that will lead to. So there were headwinds, but I think in the year we've demonstrated a strong return, and I think importantly, as I will discuss in a bit more detail at the end of the presentation when we look at prospects, we do believe that the portfolio, being focused very much on mission critical products and services, particularly in software and healthcare more broadly, has been designed to provide resilience in turbulent times. Next slide, please. So if we look at that track record, but in the context of both the 20% in the last 12 months, but if we look over a longer period of time, over 5 years, we've delivered 64%, and over 10 years, 86%. That does not take into account any tax relief given to shareholders. So that is a net return to shareholders on an annual basis. So looking at that 10-year number, that's an annual return of just under 9%, which is decently ahead of our target dividend yield of 5%. Next slide, please. So if we dig a bit deeper into what has generated the return in 2021, in terms of highlights, we can see strong fundraising. So we had a very successful fundraise this year, raising 21 million for the company. This is on the back of identified and positive cash fundraisings that we're expecting from our portfolio, but also a very strong pipeline of interesting new investments. Exits up on the previous year at 6 million, most notably exiting our investments on Prompt, NP, Innovation Braking. I'll pick up on some of those in a moment. And for those that may have seen the quarterly NAV update that we just put out, we have gone on to have some very strong exits in the first quarter of this year. In terms of investment rate, as you would expect, as the company has increased in size, so too has our investment rate, with 5 new companies invested in to the tune of 2.6 million, and also the very important aspect of our investment strategy, which is supporting the existing portfolio of investments as they grow, to the tune of just under 5 million. We continue to provide a key service to shareholders, which is share buybacks. Again, this as we would expect with a growing company, that's marginally up on last year at 1.7 million. Dividends we've covered, but the feature of this year is the very strong performance in the year has led to a 1.8 million performance incentive fee due to Albion Capital as your manager. Next slide, please. So what are the key drivers behind that return? The top 3 companies in the portfolio by scale are Quantexa and Egress, which are our top 3 companies, have both seen decent valuation uplifts following external fundraisings at higher valuations than our previous carrying value. And Aviva, which is just outside our top 3, also benefited from a strong fundraising, all raising money from strong investment partner who will be partnering with the VCT. On the negative, Murada continued to have a difficult time, but we were able to, we had already written it down to some degree, so this is bringing it down to a more realistic valuation. And there were other write-ups, both up and down. Apologies for the two crosses. That should refer you back to our annual report, where the details of write-ups and write-downs can be seen across the companies that they refer to. Next slide, please. So looking at a bit more detail of the portfolio and sort of how that has evolved over the year. So you've got the December 21 numbers with the previous year in brackets. So the theme has very much continued to be as we suggested it would be last year, which is that the focus of the company is very much on software and healthcare. So it's now very much the dominant feature across software generally, fintech being a subset of that software, but also healthcare. So if we think back in the past where asset-based investments were very much a theme, as the new VCT rules have directed us towards innovation and growth, so too have we seen a reduction in that element of the portfolio, which is now restricted to our renewable energy assets at about 9%, and principally our two schools. The rest of the portfolio is very, very firmly focused on those key themes of growth through innovation. Cash at the year end was at 17%. That has increased post year end as a result of the fundraising. So as reported in our statement today, that's now sitting at about 34%, a level of cash that we have intentionally built up to ensure that the company has got adequate resources, both to continue investing in new opportunities that become available, but also making sure that we can support our portfolio in these inevitably turbulent times that are heading our way. In terms of what does that portfolio look like in terms of scale, we're now backing some 57 companies, and really importantly, employing some 3,500 people, and those are predominantly UK jobs. Next slide, please. Those that have attended AGMs and listened to presentations before will be familiar with this slide, which is designed to look at how the portfolio is in terms of maturity. So the concept being that we want a mixture of early stage investments, which is seeding the future stars in the portfolio, but balancing that to gain diversification through maturity. So how can we look at maturity of these businesses? Larger companies being less volatile, and we do it in two ways. One in terms of revenue, and this is on the left. So you see early stage, which is revenues less than $1 million, is sitting at about 8%. That's come down quite a bit from last year. So I would suggest that's sort of relatively low state, is relatively low relative to our longer term ambition. But that's driven by the growth of the portfolio elsewhere, such that you've now got 70% of the portfolio by value is in businesses with revenues of over 5 million. So it's a portfolio that's been maturing nicely in the year. And you look at it in terms of employees, you get a similar story. So very small companies, less than 20 employees, is right down at 3%. And you've got the best part of 40% employing over 100 employees, and a number employing very significantly more than that. Next slide, please. An important feature of building a venture capital portfolio that's going to deliver strong returns is the concept that we must identify strongly growing businesses, and then once identified, we continue to run those winners. And by that I mean we continue to back those companies as they grow. The inevitable consequence of that is that the largest in the portfolio will become a significant part of the portfolio in terms of concentration. So if we look at Quantexa, Egress, and Pravica, those where by cost we originally invested just over 6 million, they're now this company's stake is now valued at some 32 million. which represents 32% of NAV. So relative concentration, but equally well, these are businesses that are growing very strongly. Quantexa has a very strong position using data analytics to fight financial crime, particularly for large banks. Egress, providing email encryption for a whole host of organizations, including local authorities, and increasingly selling in the US. And then Pravica is our children's medicines company. Now, it's worth noting that the NAV December has since grown, and that's because of the fundraising and the results for the first quarter. So this concentration is now down in the mid 20%. Next slide, please. Lots of new investments in the year, and I'll go into a few more in detail, but the theme is still very much the same, that we're looking to invest in B2B software in areas such as fintech, in areas such as data and indeed data security, but also very importantly investing in healthcare, principally health tech, ensuring that we are investing into very strong themes of looking to make healthcare more digital, therefore more efficient, but importantly backing software, which is so critical to the growth of the digital economy and the way in which businesses do their business in a more digital way. So I'll pick up some in detail as we on the following slides. If we could move to the next slide. So Gravity is an example of a business that's growing very fast now, and in terms of what they do, it's all about managing APIs, and for those that are not familiar with APIs, it's the application programming interface, which is how one bit of software speaks to another. So as the whole IT infrastructure of companies becomes more important, and they're looking to knit together lots of different software applications, being able to manage the API that enables that interaction becomes increasingly complex and important. And Gravity have created a new generation platform to do just that. So we invested 4 million of an 8 million investment round. The business is growing strongly, trading well, and our funding is being used to grow a global software business, with US expansion being the first focus, but also looking to build out and improve on the software platform. Next slide, please. So Nuvo Air fits very much into our health tech digital health strategy, and this is really looking at how healthcare can be delivered more efficiently using platforms. So principally, it's the mobile phones that we all have sitting in our pockets or on our tables that enable healthcare to be delivered in a different way. Nuvo Air looks at respiratory disease, cystic fibrosis and asthma, and by connecting a spirometer to a mobile application, the platform is able to allow clinicians to far better manage respiratory conditions. This is lots of really strong work being done in cystic fibrosis, but also increasingly, as I said, in asthma. So growing very strongly, 500% growth. COVID was a big catalyst in terms of as people became increasingly reluctant to attend hospital locations, particularly if you were vulnerable through respiratory disease. But what it has done is identified that it is actually a very efficient way of delivering that healthcare. So again, we invested just under 4 million in this case, in a 9.5 million investment round. And again, this all important overseas expansion, both into the US and Europe, that is so much a feature of how to grow the sorts of businesses in which we invest. Next slide, please. Follow-on investing, hugely important. This is how we capitalize on backing companies very early and then backing our winners. These are companies that are typically looking to scale, i.e. looking to grow very rapidly, and will require successive rounds of funding as they grow and expand their sales and indeed their product. So Aviva, many will be familiar with. It's one of the larger. It's our digital health business treating diabetics through provision of the services of dietitians across a healthcare platform. Black Swan, that uses data analytics to help predict how consumers might purchase products in the future, so used by lots of the FMCG businesses. And then Helios is our mental health platform, which looks to treat the mental health of particularly adolescents. And for all the wrong reasons, Helios is growing particularly strongly as this country is currently facing a healthcare crisis amongst adolescents, caused by many things, but the pandemic clearly has not been great. So really good to be able to back these sorts of companies that are making a real difference to diabetics, those with respiratory disease, or indeed children who are having a very tough time with their mental health. Next slide, please. Some digging into some of the exits in the year. On-prompt was very much in the world of automation, so it helped companies manage their supply chain in terms of managing supply relationships, invoices, supply orders. So that was sold to Albion in the year. Our original investment, 3.7 million, we delivered just over a two times return, which for this fund gave us proceeds of 2.3 million. So a perfectly respectable return. Next slide, please. Innovation Broking was an investment we made really before we doubled down on our software and healthcare. So it's a less techy business, although all businesses have an element of tech in their business models now. It was a very early stage, effectively startup insurance broking business, but backing a team that we knew well to build up a very high quality insurance broking, servicing high growth SMEs, particularly in life sciences and technology generally. We invested 1.3 million in equity, and we've delivered a very strong return. So the 10.3 times return on a 75% IRR over the period of investment. A relatively small investment for Albion development VCT, about 0.9 million of proceeds, but a really good return and evidence how VCTs can build and back startups and build businesses very rapidly. Next slide, please. Really just reiterating what is our investment strategy, how do we articulate what we're trying to do, and it's really about being prepared to invest right through predominantly from the early stage, but being able to invest up to Series B, which is the point at which companies are beginning to scale. We're looking to invest long-term trends, so software, healthcare being the key ones, but very much focused on business to business. So we make a conscious decision not to be exposed to the consumer, so that we're less exposed in the event of economic downturns. Something which I'm hoping will serve us well in the coming months. In terms of the areas, again, software, healthcare, but also being prepared to look at other technologies, automation being good, but looking at areas like automotive technologies and sensors. Next slide, please. Albion's always been very focused on investing in companies with a positive societal and environmental impact. And you will have seen this over the years in our focus on renewable energy in terms of delivering a sustainable renewable energy, but in other areas such as provision of education and our very long-term desire to invest in healthcare. What we're seeing now, particularly now that we're signed up to UNPRI, which is Principles for Responsible Investment, is the whole element of ESG becoming increasingly embedded in our investment process and how we engage with our investee companies. So it's looking at ensuring that the portfolio we're building is sustainable and has positive impact. But it's also making sure that we work with our investee companies in how they can implement effective ESG strategies. So if we move to the next slide, you can see how this is now increasingly embedded in what we do in terms of when we identify investments. So understanding those those sectors and industries we don't want to invest in on grounds of negative societal impact. But also when we undertake our due diligence, we look at how these businesses we're investing in are on where they are in their own journey in terms of their ESG strategy, and then we give them the support to build out their ESG strategy over time. And not only is this delivering good ESG outcomes, we believe it's delivering long-term sustainable value for the portfolio. So we look at ESG on a regular basis in our interactions with the companies, particularly around board meetings. But whenever we put in follow-on funding, we use that as an opportunity to revisit ESG initiatives that the companies can undertake. And what that is designed to do is to also make sure that when we come to exit, these businesses have strong ESG strategies in place, which can be showcased to potential acquirers or indeed new investors if there are new investors coming in. Next slide, please. Within Albion itself, we're very focused on ESG as you would expect. So we look at our own carbon footprint, how we can reduce it, and where we are unable to reduce it to zero, we are looking at offsetting it using biochar, which is basically effectively charcoal absorbing carbon, and then looking to do what we can locally, and then more broadly looking at how we can make our own business more diverse. And we're doing that through working with an excellent outfit called Fair HQ, who are helping us to put in the best diversity and inclusive practice, but also looking at how we can bring a more diverse group into the industry through our work with future VC and the provision of internships for those who might not otherwise have felt able to access our industry. Gender diversity is important both in our own business but in businesses in which we invest. So we are signed up to the Investing in Women Code, which allows us to prioritise and report on those women founders that we are backing. So ESG is all the way through. Our boards are asking us, our VCT boards are asking us lots of questions around ESG, rightly so. So we're reporting to them on a regular basis. But what you'll see in our annual report is more detail in our ESG practices. And what I'd like to see over time is more data showing the impact of ESG on our portfolio and the positive outcome that it should deliver. Next slide, please. So prospects going forward, we are in very challenging times. There's no two ways of saying that. We are faced with the situation in Ukraine. We are high inflation, rising interest rates, and that has given rise to a correction on the quoted markets of some technology stocks. That feeds through to us in terms of valuations when we revalue our portfolios on a quarterly basis. But despite that challenging times, we have built a well-balanced portfolio, and that's balanced both in terms of sectors we've talked about, but also in stage of maturity. And to repeat my sort of opening background, we do believe that by focusing on mission-critical products and services, that's particularly in software and healthcare, that is designed to provide resilience. These are the enterprises can't turn off a lot of this software, which in turn should give us an element of pricing power, which in turn will give us some protection against the inflation effects that we're seeing. But what we can't get away from is that there is considerable uncertainty which could give rise to greater volatility. And I'll come on to where we are in the first quarter in a moment. But we are fortunate not to be exposed to discretionary spending of the consumer, because clearly the consumers are going to be hit hard by high price inflation. And very much on the positive side, we are still seeing some really very exciting investments coming through. There are very strong entrepreneurs out there building global businesses, and we're well placed through the Albion VC brand to provide both funding and support to enable them to scale their businesses. And we also have a significant opportunity in our portfolio to back the growth companies that are coming through as they grow. But we will need to be mindful that they're properly funded, and we will need to be mindful that delivery of business plans may take longer than previously envisaged. But if I turn to the next slide, it's worth reflecting on the first quarter of this year to March. So this has just been announced. So despite all the challenges, we've been able to deliver a quarterly return of 2.28%, which is a good contribution to our 5% target for the year. Looking a little bit further forward in terms of how we engage with our shareholders, we are continuing currently to engage for AGMs through a virtual medium such as this, in the belief that this should give rise to greater engagement shareholders. We'll clearly keep that under review. But what we do want to do is to build on our annual shareholder event for all the Albion VCTs, which is on the 23rd of November this year. So making that hopefully a very worthwhile and enjoyable event, and I would very much encourage those on this call to attend. If you want to reserve your place, it's as easy as sending an email to info@albion.capital. So 23rd of November 2022, and it's being held at the Royal College of Surgeons, which is in Lincoln's Inn. First dividend payable of 2.37p, and that dividend is payable at the end of this month on the 31st of May. So despite the challenging times, some good news for the first quarter, and we will continue to work hard on your behalf to navigate our way through the turbulent times in which we live. So on that note, a huge thank you to all for listening to the presentation. I hope you found it useful and informative. I know that we'll be moving on to Q&As. And in that regard, I'll now pass back to Ben, who's going to run the Q&A session.
Thank you, Will. And as Will said, we'll now move on to the Q&A element of the AGM. And I'm pleased to note that on the Lumi platform, we have got a reasonable number of questions that have come through. So the first question that's come through online is, will this be the new format for the AGMs going forward? I'm happy taking that question. So we have interacted quite a lot as a board on the format of the AGMs, and also unsurprisingly, Albion as a kind of group have looked at it to ensure consistency. We're basically trying to do everything we can to get as much interaction with the shareholders as possible. We reacted through the COVID crisis to move online, and in fact, what happened was that we got the greatest interaction with our shareholder base that we had ever had. And that led to us adopting this model as the concept for this year. We'll just have to keep everything, I think, under advisement. I think we'll just have to keep on looking at it, looking at the feedback from this event, looking at feedback from the shareholders generally. And there is every possibility that in a post-COVID world, as we all hope we're in now, people would welcome again a more formal in-person shareholders meeting, as opposed to the hybrid structure that we're operating here. We're just really looking for whatever gets the greatest engagement. This has worked this year because it worked so well last year. If there's a mood amongst the shareholders to move back to physical meetings, we'll listen to that and look to achieve that next year. But again, the whole purpose is to get as much engagement as we can, and we'll look at that on a year-by-year basis. So the next question that's come in, are the board concerned about the kind of macro climate, and in particular the kind of sunset clause, which is coming up in 2025? We do touch on this at every board meeting. It's very much at the front of our minds, but I think we're really well placed to deal with any concerns on this front, not least because of the work that Will is undertaking on our behalf. So I'm going to pass over to Will now to cover this issue in a little more detail. Will?
Thank you, Ben. No, this sunset clause is effectively the clause that was put into the VCT scheme when it was given European state aid approval back in 2015. So it was a 10-year period, which, as Ben alluded to earlier, takes us to 2025. And at that point, the scheme needs to then either be made permanent or that clause extended. So we're doing a lot of work on this. So we are really engaging both with Emergency Treasury, but with parliamentarians more generally. And in that vein, we're very involved with industry organisations like the Venture Capital Trust Association, the British Venture Capital Association, and indeed the AIC. And the key message that we're putting forward is actually just how successful the VCT scheme has been, and the benefit that it has to the UK economy in terms of delivering innovation and growth and increasing employment. So if you look at the VCT sector in aggregate, there is now some 6.5 billion that has been deployed, supporting many companies, and it's something like 1,000 businesses are being supported by VCT money as they go through their growth journey, and providing that critical funding which would not otherwise be available to those companies. And the evidence for it is shown in our own portfolio. So if you look at Albion, as the portfolio slide my presentation showed, there's some 3,500 people being employed as a direct result of the support that we are giving to those businesses. So lots of reasons to be pleased with what VCTs are doing, demonstrating to all stakeholders the value of the scheme. And continuing to do what we're passionate about, which is helping those entrepreneurs build really exciting, high-growth, innovative companies to the benefit of the UK economy as a whole.
Thanks, Will. The next question that's come up online is one that actually I've received in recent weeks through the questions to chairman email address. So it's good that I've got an opportunity to respond to it here. The question is that the fact that a number of the top 10 portfolio companies appear to be loss-making yet have high valuations. Is there a risk that these holdings are overvalued in the financial statements? And of course, that's an entirely kind of intuitive question. I guess really it reflects the change in the portfolio over the last kind of 5 to 10 years, away from pub chains and perhaps schools and other things to to tech businesses, B2B tech businesses and innovative healthcare businesses. And really they're exactly what Will was just saying in relation to why the tax relief is appropriate for VCTs. That's where the innovation is taking place. That's where there is the high growth, and that's where VCTs are being directed to deploy their resources. And these are growth companies. And as growth companies, they essentially are on a journey, and therefore the big paydays won't necessarily come around until they become a little more mature on that journey. So despite it being kind of a little counterintuitive in terms of their current EBITDA and their current profitability, nonetheless, they are on a journey which a number of either independents or others believe is taking them to a position where they'll be extremely valuable. As a board, we do hold the manager to task on this quite a lot, and in particular, we are always reassured when there is a crystallizing event, be that a kind of a new funding round or an exit, because that's the ultimate proof of what something is worth. The other area where we get a substantive degree of reassurance is that the nature of the Albion stable is that actually there's an audit which independently verifies the valuation of each of the key assets, actually 3 out of every 4 quarters, which is quite unusual, and actually from a board's perspective, very reassuring. So you do have that independent party, that auditor expert in this area, independently verifying and challenging the valuations that are put on these businesses. So a great question, but hopefully one that this answer gives a little bit more colour to. So the next question that's come through is a factual one, which is, when is the next shareholder seminar? And as Will said, it's physically happening in Lincoln's Inn on the 23rd of November, and we will be delighted to see as many of you as possible at that event. I think it'll be a really good event, and one that will be very illuminating. So please do come if you are available on the 23rd of November. I think that is the end of the questions that have come through online. And so unless there are any more, I will now turn to the formal business of the AGM. So the resolutions will be voted on by way of a poll, taking into consideration votes already received via proxy and corroborated by the registrar. The full text of each of the resolutions was set out in the notice of meeting, and the board is recommending members to vote in favour of the resolutions. And resolutions 1 to 8 each require a 50% majority, and resolutions 9 to 11 each require a majority vote in favour of 75%. So 50 and 75% in relation to the votes to be passed. Once I've formally opened the voting, the list of resolutions will automatically appear on your screen under the voting tab within the navigation bar. Please select the option that corresponds with how you wish to vote. Once you've selected your vote, the option will change colour and a confirmation message will appear to indicate that your vote has been cast and received. There is no submit button. To vote on all resolutions displayed, select the Vote All option at the top of the screen. If you do wish to change your vote, reselect your choice. To cancel your vote, select the Cancel button. Do note that a member is not obliged to use all their votes. You can also change your vote if required at any time while the poll remains open and before I announce its closure. If you have already completed and submitted a proxy prior to the meeting, you don't need to vote again on the poll unless you wish to change your vote. As a reminder, you have 3 options for each resolution. You can vote for the resolution, vote against the resolution, or you may withhold your vote. A vote withheld is not a vote in law and will not be calculated in the proportion of the votes for or against the resolution. If you have any questions on the voting procedure, send those through now. But in the meantime, I now declare the poll open. So there are no further questions on the resolutions, and I will now briefly summarise the resolutions that are to be voted on. The first resolution is to receive and adopt the company's accounts for the year ended 31st of December 2021, together with the strategic report and the reports of the directors and auditor. The second resolution is to approve the directors' remuneration report for the year ended 31st of December 2021. The third resolution is my own retention as a director of the company. The fourth resolution is the re-election of Lynn Golby as a director of the company. The fifth resolution is the re-election of Lord O'Shaughnessy as a director of the company. The sixth resolution is the re-election of Patrick Reeve as a director of the company. The seventh resolution is the reappointment of BDO LLP as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which the accounts are to be laid. The eighth resolution is to authorise the directors to agree the auditor's remuneration. The ninth resolution is to allow the directors to allot shares. The penultimate resolution, which is a special resolution, will give the directors the power to disapply preemption rights. The final resolution, which again is a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. The results of the voting, including the proxy votes on each of the resolutions, will be announced through a regulatory information service, and it will also be published on Albion Capital's website as soon as reasonably practicable. I confirm that the poll is now closed. Thank you. That concludes the formal business of the AGM. I would like to thank all members who've joined the AGM. And as I mentioned earlier, the board welcomes any feedback you may have, which you can do by sending an email to aadvchair@albion.capital. For those of you who are interested in seeing the list of questions and their corresponding answers, these should be available shortly on the Albion Capital website. There being no further business, I declare the meeting closed. Thank you all very much for attending.